Bankers are biting their nails, hoping that this is helpful to them, but not all bankers are really believing this. We've got a chairman of a mid-sized bank. Scott Shay just ran in from the green room. He's the head of Signature Bank, vice chair of the Mid-Sized Bank Coalition of America, too. What you can see of this, it's broad strokes, but do you see some fine print that you could live with, that you like, or does it just help the big banks?
So far, everything that's been done to date has helped the big banks. Since the financial crisis, the 6 big banks have grown their market share tremendously. They're now up to 60% of total assets. So we, as a mid-sized bank and the Mid-Sized Bank Coalition, is certainly hoping that the scales will be evened and that we'll be allowed to compete.
Okay, so this sort of reworking of how we deal with banks, big banks and financials that run into trouble, and folks, we all remember the financial crisis. You and I and every taxpayer had to bail out banks who had taken really crazy risks. A lot of people didn't think that was fair. You've got 2 bankers from Goldman Sachs who are now in that cabinet, Gary Cohn and Steven Mnuchin. Do you really, are they really the people to figure out the best way to just make sure that you and I don't bail out when a big financial company gets into trouble?
Well, Goldman Sachs, remember, started out not being a bank, and it was during the crisis that they became a bank.
Right, they had to.
They had to. They were forced to. The Federal Reserve said yes to that. One of the proposals that at least House Republicans have put forward is to get rid of the so-called Hotel California provision of Dodd-Frank, which would allow those banks, those current banks, Goldman, Morgan, and others, to go out of that whole framework, in which case, theoretically, taxpayers would have no responsibility whatsoever. And then you're left with J.P. Morgan, Citi, Bank of America, Wells Fargo.
But does anything in what the president just talked about give any relief to small and mid-sized banks?
Not so far. I mean, let's not forget, Dodd-Frank is law. So until something passes the House, the Senate, and is signed by the president, we're still operating under those very, very burdensome rules.
You remember Cody Willard, you guys? He used to be on the show. He used to be on this network, and he slapped this up on one of the doors up on our floor, on the 18th floor. And again, people got very frustrated because they said, stop the bailouts. They didn't want to see big banks bailed out. If tomorrow, and I know it's a hypothetical,
right, a
large financial institution stumbled and fell and got into real trouble, whether it's a London whale type situation times 1,000 or something like a recession or a real problem, what would happen?
We'd bail them out. I mean, there should be no illusions about that. They would be bailed out. And when you have banks that are $2 trillion in size, where there's also no Glass-Steagall, so you have the speculative part of the banking system together with the bread and butter payment system, I mean, you'd have to bail them out.
Well, and now look at the Dow Jones Industrials. I'm going to have you pivot here for a moment. The president earlier revealed that we will see, as you heard Adam Shapiro say, a tax plan revealed, and it will have a massive tax cut for both corporations and individuals. Call me a cynic too, but I don't think that this market believes it right now. They need to really actually see it now, because there have been too many times where such a report was revealed, markets jumped up, and then we got nothing. So now, folks, if you're driving and listening on XM 113, I should tell you the Dow is now down 18 points. So we're not seeing a punch up into the green and holding that. Why?
Well, I think what we really need, and the most important priority, is corporate tax reform, because that's where the demand for jobs comes from, is when corporations are taxed in a way that doesn't encourage them to go abroad, doesn't encourage them to overly automate, but to actually hire people, and advantages creation of jobs. I think it's very possible to put together corporate tax reform that'll be extremely positive for employment, and that helps everybody. I co-authored an article with Michael Davis on how to do corporate tax reform in the right kind of way.
And I'm looking right now, and there's a lot of red on the screen, and we can cycle through what the laggards are, but you just saw the financials. It doesn't appear that they're getting any kind of bump from this. But look, getting rid of a lot of regulation is absolutely something that is welcomed. But, and I wrote this down, I thought this was interesting. Steven Mnuchin said, we believe in regulation, but we don't believe in regulations for their own sake. He said, quote, billions of hours, it's a lot of hours, billions of hours and dollars have been wasted on that, complying.
There's no doubt that we are now complying with regulations that have no cost benefit or a very, very limited cost benefit. And we've got to get rid of those. We should get the big picture right. Our problem is in the financial economy is that we don't have the big picture right. If we had the big picture right, we wouldn't need the devilishly complex regulation at every step of the way.
Scott Shay, Signature Bank, sticking up for the small and mid-sized banks. Thank you so much.
Thank you for having me.
Again, now the